Welcome everyone to a brand new episode of Bearish or Bullish. I'm Julie Alexandria here with JC Peretz. JC, you guys are fresh off the monthly conference call.
Yes.
You mentioned a whole lot of things. We're about to get into it, but what I loved is that right off the top, you were mentioning some old media. You gave some shout outs to some magazine covers, specifically The New Yorker and The Economist, two of my favorites, especially if you're from the East Coast, big ones out there. So how much should the public be paying attention to covers when it comes to financial decisions? Should people be taking that into consideration?
I don't think so. You know, the thing is, for us, it's really interesting because journalists do a really good job of, sort of publicizing public perception, right? So they basically are really good at understanding what everybody's talking about, what everybody's saying, and then being really creative as to putting that on a cover. For us that are price driven, right? We're data driven. When we see certain data pointing to certain things, and then you see the magazine cover confirming exactly what we thought, like it sort of adds to that, right? So like if you look at in February, literally the week the market peaked before the coronavirus, The Economist comes out with a magazine of stampeding robot bulls. Like you can't make this up. You can't make this up.
I'm a big fan. I'm very bullish on that cover. Okay, let's get into it. The monthly conference call.
So were they. They were very bullish, and we were already shorting tech stocks at that point. We were already short tech, and then they come out with stampeding robot bulls. It was like, oh my God, this is great.
I mean, talk about taking it to like a literal level. I'm here for it. All right, you mentioned a whole bunch of sectors and stocks that we should be paying attention to. Let's kick it off here with bearish or bullish materials. Go.
You know, it's showing a lot of relentless strength for a while, particularly the chemicals. So you got a combination of miners and metals and chemicals. You got a lot of things going on there. I think moving forward, I think some of those chemicals and some of those more U.S. stock market correlated ones might take a little breather, well-deserved breather. But there are going to be some winners coming out of there. And I think it's going to be from the gold miners in particular. Newmont Mining, 25-year base. It doesn't get more beautiful than this. You have clean levels. 72 is a good one. So if we're above 72 in Newmont Mining, I think you own it. I think it goes to 100.
I like it. Regional banks and energy.
Mug. Isn't this dope?
What is dope? I can't see you. I can't see you. You're drinking your coffee.
You can't see it?
I can't see
it. California Republic.
Oh, California. Well, hey, I'm very bearish on that cup.
Oh,
come on, we were bullish on the bulls, we're bearish on the bears. All right, regional banks and energy, we're seeing a lot of sectors, a few sectors really poised for a breakout or very close to it. Which one of these stood out to you?
Both of them for different reasons. So energy stuck below those former lows from 2016, right? So if we're stuck below that, like we're below overhead supply. Like it's not like JC's opinion, it's just fact. So until we're able to break out above that, you know, it's hard to be super bullish, but I do think it comes. I just don't know how long it's going to take. That's really where my head is at. And then REITs, this could be a potentially big breakout, right? If we're above those former highs, yeah, I think you can own REITs. So they're two really interesting situations. I don't know what's going to happen next, but the beauty of that is that nobody else does either. So, so we can lay out the levels. In REITs, if we're above the former highs, you own it. In energy, we got to be above those 2016 lows. If we are, I think you own it.
Okay, staples outperforming consumer discretionary. Let's talk about what that means for the stock market when that happens.
For sure, because when stocks are doing well and money's being put at risk, consumer staples tend to underperform traditionally. Because what are consumer staples? You know, things we're going to buy no matter how bad the economy gets. We're still going to brush our teeth and wash our dishes, you know, wash our clothes, smoke cigarettes, drink beers. All of those are consumer staples. So in an uptrending stock market environment, those tend to underperform because there's just better places to be than toothpaste, right? But when the stock market is under pressure and stocks are selling off, those stocks tend to be a safe haven and tend to outperform in that environment. So if we reverse engineer that mentality, when we see consumer staples outperforming, that's a heads up that something's potentially wrong underneath the surface. And that's precisely what we've been seeing since March the 1st. So we're going on 3 months. This is not anything new. So I think a lot of people are seeing that now, but I remember in March being like, listen, stocks are fine. We're making new highs, but I don't know why staples have been outperforming the last couple of weeks. That doesn't make any sense at all. This was in March, and now we're looking back on it. They're still outperforming, and things are getting messier underneath the surface for stocks. Makes perfect sense.
So is that one of those things that you would say, if you look at it and call it a benchmark, if you will, is that one of those things that benchmark then foreshadows what the market will do moving on?
Yeah, I mean, listen, we have a zillion data points, a zillion tools, so you need to figure out what you're going to give more weight to, right? Like we look at seasonal trends, but is it like in the top 5 most important things we look at? No, it's not even close, right? We have other things that are much more important. I would put the relationship of consumer staples with the United States stock market as a very high weighting overall in the JC scale of most important indicators. 100%, definitely.
It's a high ranker. Okay, you mentioned Tesla. And I have my own issues here, but Tesla makes an appearance. You are predicting choppy waters ahead, but how much of Tesla's stock does depend on what Elon has to say?
I don't think it has anything to do with it. You know, it's fun. It keeps the journalists employed. I'm all for it. You know, for me, it's glorified gossip at best. You know, malicious journalism at worst in many cases. So like for me, I try to ignore all of that. And just focus on price. And that has really been rewarding over the years to be able to sort of ignore all that stuff. Like, yeah, I see it on Twitter and the memes and the funny haha. And like we get to joke and we're adults and we pretend we're little kids while we're at work. Like, you know, it's great. But at the end of the day, it's really price that pays. And that's really the only thing that matters, right? So I'd say if you enjoy yourself sort of, you know, joking about that stuff, Doge to the moon and Saturday Night Live and all that stuff. If you enjoy all that stuff, good for you. But as far as making money in the market, they're two different things, right?
Absolutely. Okay, here's one that I did not expect, but it's doing really well. Rick's Cabaret, the only publicly traded adult entertainment club. I myself am a big fan, and apparently you're very bullish on this one.
Yeah, well, I mean, if we're above those former highs, so like I can punch it up right now just so I can take a look at it, just so I can get the price right. It's not RICK anymore, is it? It's or is it still?
No, but you said only above 74 with a target of 118.
Yep, that's exactly right. 74, because that's the Fibonacci extension. So if we don't hold those levels, then all bets are off. But it is interesting to see that particular name bucking the trend, at least so far. So it's a heads up that, you know, maybe you know, investing in publicly traded strip clubs is a great idea. So far, it's been a tremendous idea. I mean, the strip club stocks are up like 700% over the last year. So, I mean, it's hard to find a better investment these days in strip clubs.
Well, listen, it makes sense. The world is opening up again. People want to have fun, men and women alike. I'm personally a huge fan of Rick's in New York City because I'll tell you why. They have the best chicken parm in the city. I will stand by that comment. It's a $40 prefix. You get off the plane at JFK. Here's what you do. You go in with a cab or taxi or, you know, an Uber. It takes you right to Rick's, right in the middle of 34th and 5th Avenue. And then you get your $40 prefix with your chicken parm, drink included, lap dance not included, but the best entertainment that you will find for $40 and the best meal. That is my lunch when I get off the plane.
All right, I see you. All right, I see you.
Just letting you know. All right, let's do a little, let's wrap it up here. I want to do a little wine trivia for you, okay? Because I like stumping you with a little wine trivia. The country with the highest density of indigenous wine grapes in the world. What is it?
I mean, I want to say Italy. I want to say Italy.
Final answer?
Yes, final answer.
Incorrect.
What is it?
Portugal.
Really?
Yep, Portugal. And many of them are on the verge of extinction.
Yeah, right. There's a zillion different varietals for sure. That's interesting, Portugal. That's interesting. Because when we study wine, you know, Portugal is, you know, you can go down the rabbit hole in Portugal, but like it's more simpler. Man, when you get to Italy, what a shit show it is in there. Oh my God, it's so complicated, Italian wine, because the French have more structure because of that Germanic influence. Oh my God, the Italians are like, oh, a little bit of this, a little bit of that. Oh, you'll be fine.
Bearish or bullish, really fast, the Knicks. Bearish or bullish?
Man, how about that? Knicks' first victory, first playoff victory since 2013. Good for them.
Right?
Good for them. It's good for basketball that the Knicks don't suck. You know what I mean? Like they don't even have to be winning championships. Like they just have to be like in the playoffs and in the conversation and have some good stars. Like, that's just great for the game. Couldn't be happier.
I agree. Big market. Okay, last one. Bearish or bullish? Disneyland here in California debuting a $100 sandwich. It's a panini, and it will be available in June. It also serves 6 to 8. Bearish or bullish?
How good could that be? I mean, the food in Disney World is not exactly great, and you're paying a ton for it. This is a $100 sandwich. I don't buy it. I'm bearish. Fade it. Feed the ducks.
I agree. I'm bearish on it as well. JC, thank you so much for all this and so much more, plus all of the latest from the monthly conference call. You can check out allstarcharts.com.
You know what you're drinking? You're drinking Muscadet from Nantes.
What is Muscadet?
It's from Nantes.
I don't even know where Nantes is. What is Nantes?